Welcome to the Stocks with Josh show. Stock Josh fam, hit that like and kick this video off with a hi in the comments. This isn't financial advice, it's for educational purposes. So at the start of this week, I gave you guys all a meta buy call 2 days before the earnings came out. I bought the next morning and we enjoyed a very nice profit because I said, let's sell it before close. Despite that, a lot of people asked me in the comment section if I was still holding. Of course, the answer was no. I said to everybody that if they failed at earnings, this thing was going to drop below $100, a massive move to the downside. And that's exactly what happened, an unrecoverable loss. I'm not interested in taking those risks because we are in a risk-on environment right now. Okay, and let's look at Google today. And lo and behold, it bounced off the 200-week simple moving average at what price? $92. How could anyone have known? They would have known because I called it out months ago. You can know too by hitting the like, the subscribe, and hitting that bell. Fam, leave me a comment if you remember me telling you that we would see a $92 Google that we saw today. Now, we've enjoyed a number of nice calls this week, but let me tell you guys where my head is at. Making money can be intoxicating. I've been on a high. There have been great gains made this week. But my goal today was to be able to take a step back and think for a minute, process and digest all of these moves. I spent a lot of time in the charts today looking at a bunch of companies, too many to cover, but I settled on talking about Apple today. Before I do that, we're going to go back to school. We're going to go charting 101, and we're going to talk about candles. Yesterday, the markets gave us a gravestone doji candle on the SPX and the SPI. Both of those, the SPX and the SPI, they measure the S&P 500 companies. So what exactly is a gravestone doji candle? A gravestone doji is a bearish reversal candlestick pattern. It's very important to know some basic candles. Remember that I told you guys that we were going to get a 10% move on the SPX. I told you guys that when we were down at June's lows, and that's exactly what we got, but we actually got a little bit better than that. We got an 11% bump so far. So it's extremely important that we stop and we process what the candle just told us, that there is potentially a reversal at hand. We've gone on a heater and we may have a slight pullback. So everyone's going to ask me, do I think that this is the end of the move up? No. I think we should rally all the way to the midterm elections November 8th. I gave you guys that also. I didn't think we would get here that fast, but as all of us know, bear market rallies move. So I think we're going to get a slight pullback to around 37.75. And that is very dependent on what happens with Apple. And that's why I'm choosing to talk about Apple today. But before I do, I'm going to touch on the Qs, the TQQ and the SQQ. How does what the chart's doing affecting my trades today? I have a longer view on the TQQ. Okay, that's going long, believing that the markets are going to go up. I have call options that are 4 to 6 weeks out on those. And I have a shorter view, a positive view of the SQQ. I have call options that are under 3 weeks on those. I know that many of you guys don't do options right now. I can just tell you that I'm working on something for you guys. Be patient with me. But even if you practice trading these ETFs with just cash, it would be helpful for you guys to learn how to view the overall trends in the markets when they go up and down. That's what's so good about the SQQ, is that you need to look at making money when the markets go the other way. All right, you guys may have noticed that I've been time-stamping my videos for you guys. One advantage is if I go over video affiliate links like MooMoo. If you already have MooMoo, you guys can skip ahead. On that note, I added a group chat on MooMoo called Stock Josh Fam for better communication and conversations as a group. I answer some questions for individuals that I sometimes wish everybody would see. That's how we will all begin to see them if you can join that chat group and you can see what's being discussed in the day. If you don't have MooMoo, you guys are missing out. Right now, they have their most competitive offer to date. You open and fund your account and you get up to $30,000 in 15 chances at stock valued at $2,000 each. You drop just $1 and you get one chance at $2,000 and you get one crisp Alexander Hamilton. Put in a honey and you get 6 chances at stock valued at $2,000 each. But don't just do it for the money. Do it because MooMoo has Stocks with Josh community group chat. Stay connected to the trade monster. We are tearing up these earning plays. We went through the fire and we didn't get burned. They've got the chat. They've got the 16 hours of trading daily. They've got free level 2 data, and they got the 8 types of orders that you need to be successful. Okay, let's get into Apple. Apple today. Apple's earnings are out today at 5 p.m. Eastern Standard Time. I'm going to cut right through it. You don't even have to wait till the end of the video. I bought Apple calls out of the money, November 4th expire. So this is a super high risk, very short play. I bought at 12 p.m. Central Standard Time, and I intend to sell those right before the close of the day. I bought the midday drop, and I'm hoping for a end of day pop. To be very clear with all of you guys, if these options continue to drop because Apple continues to fall before their earnings announcement, I will simply take my loss and get out at the end of the day, no matter what. I'm going to be playing this conservatively. I don't want to be in the situation like we're seeing with Meta and Google with massive potential drops where stocks get punished because they fail. Let's go check out what the charts are showing us on Apple. Okay, we're looking at the Apple stock on the daily candle view, which gives us a multi-year view. And if we want to go back and look at some past recessions, let's go back to 2018, we'll go from the top to where it ultimately pulled back to. It was around a 40% drop. And this big blue line that you see underneath all of the price action is the 200-week moving average. And you can see that in that recession, we pulled back roughly 40% on Apple. We came back and tagged that 200-week moving average. Let's check the next recession. If we come back here around 2020, the COVID crash, we did not make it all the way back to the 200-week moving average. That moved pretty quickly, but we did get around 36% down. Now, I've told you guys this in the past, that I believe that this was an area of consolidation and accumulation, and that this was a season of markup right here. This whole area was markup, and I've been telling you that we've been in a season of distribution that typically precedes a decline. Now, that's a pretty bearish view of Apple. Apple is a really good company, and I have compliments for their fundamentals, not criticisms. I love the fact that they continue to raise the price on their phones, and they continue to be able to get that from the market, growing their bottom line. But let's go ahead and check out and look at a possible scenario of where Apple could drop. Now, this may not happen today. They may do well in their earnings, and we could see a spike up. But let's say that their earnings came back or their forecast did not come back right. Let's go to the top and let's just see if we were to have a pullback similar to past pullbacks, where would 40% hit? Oh my goodness, look at that. It hits yet again at that 200-week moving average. So if we are in any kind of a decent recession and we got a typical pullback above 35%, to 40%, it would bring us all the way back to that 200-week moving average again, which now it does depend how this stock moves. If these guys continue to perform well, we could absolutely see a pop right now. But I still think because all of next year is going to be recessionary, Apple is absolutely going to come under pressure. Even if it's not here in the States, it's going to come under pressure abroad. We're going to see reduced earnings, and as a result, we're going to see continued distribution and unwinding of large Apple positions with a very high PE ratio. And we're going to see this move in this range until eventually we come back and we tag this 200-week moving average. That would currently put Apple around 110 to the 120 range. We are right now at a little bit of a premium on Apple for the current economic environment that we're in. Remember the actual goal right now. Apple has to kill it, otherwise their stock's going down. Even if they kill it, they have to give future higher guidance. And at the end of the day, I've told you guys over and over again, I simply can't imagine that they can do that in this recessionary environment. I'd be shocked. We're playing it cautiously. Why? Because there is just too much money to be made every single day to get tied up in someone else's problems. So right now, it's in and out. If this video helped you, then join the Stock Josh family. Hit the like, that subscribe, and that bell. And don't forget to hit the link that's up above and get that free MooMoo money and join my group chat over there. Peace and blessings, fam. See you tomorrow.